Okay, folks, welcome to Members Stock Pick Requests. This is a service that we provide our members where we review the stock symbols that they like us to review on video. But before I go into those symbols and give my opinion about how I think those charts are looking, you should be asking yourselves, why am I listening to this guy? How is he doing this week with these markets down? We are having a great week. And I will go into one of our trades that we closed out today, which was IMH, which was a short trade. But first, let's go over why are we doing well in this market? Why are we doing so well this week? It's because we were short the market in advance of this breakdown. We have been discussing for weeks now the breakdown in economic data. Take, for instance, last week, consumer confidence, a big miss. GDP for Q1, the initial read, market had expected 1%, actual 0.2%. Construction spending last week, a big miss, was expected to be 0.4%, actual negative 0.6%. Fast forward to this week, the trade balance, huge trade balance, huge trade deficit. This put that 0.2% GDP number into negative territory. We actually have a negative GDP for Q1. It will be revised next month. Keep an eye on it. The ADP employment change, big miss today. This was announced today. And don't forget what's coming out on Friday is the non-farm payrolls. These are the government numbers. Productivity, very important. We are seeing a huge decrease in productivity per employee. What does that mean? Either corporations need to grow profits some other way, or they need to stop hiring and squeeze more productivity out of existing employees. This is not a good economy. Let's get to the charts. Okay, so before we get to the symbols that we want to go over, we want to take a look at the health of the overall markets. Now, the Russell 2000, I mentioned last night on Market Wrap that they would try to close above 121. That's exactly what they did in the final minutes of trade today. Expect a rally on IWM. Do not go shorting this market on Thursday morning or you will get burned. You don't need to be a member for me not to want you to lose money. Do I think that this market's going off to new highs? No way. I think that we're going to see a counter trend move. We're going to roll back over and probably break down to new lows. S&P 500, daily chart. We broke down below the lower band of the rising uptrend channel today. Not a pretty sign. RSI confirming the breakdown. Down volume rising. So these are just a couple of the charts that I went over last night with members, and I go over them every night after the market is closed, where I have time to review the charts. We do our analysis. We set our trade strategy in stone for the following day. We don't need to sit in front of our computers to trade well. We need to have a plan going into the next day. And on the weekends, we like to have a big trading plan for the coming week. We take a look at the weekly charts, monthly charts, see how we're closing out each week for that big 30,000-foot view, the big macro view of the marketplace. Now, the trade that we closed out today was IMH, Impact Mortgage Holdings. We were shorting up and into 29.85, and our price target was the filling of the gap here. I didn't need to sit in front of my computer like a day trader watching and waiting, clicking my mouse all day long. All you needed to do was put your limit orders in and get stopped out of the trade. We booked our profits, moved to the sidelines. We made a ton of money on this. It was down 16.6% in one day today. Now, when I was talking about shorting IMH over the weekend and last week, people were saying, are you nuts? Look at this thing. It's going to the moon. And what we did is we picked out the technical inefficiencies in IMH. Extreme overbought on RSI. It was all the way up to 97 on RSI. It was leaning into the third standard deviation Bollinger Band. This is not your out-of-the-box 2 standard deviation Bollinger Band, which will come with your standard trading software. This is a customized 3 standard deviation, as you see right here. Note the 3. So we booked our profits, moved to the sidelines on IMH, It could possibly head lower, but why gamble? We have a fat profit. We move to the sidelines. Okay, let's get to the stock picks that our members requested. Okay, BTU. I went over BTU last week on member stock pick requests. You could see it on StockTwits Twitter, on my website as well, in the blog area. This is a monthly chart of BTU. This is a stock that has seen quite a bit of damage. The market sent you signals back here in March and then April of 2011 that you needed to get out. What were those signals? The first one was when we peaked out here at 82.19. We pulled back to a low of 18.97, rallied. This is the financial crisis. Rallied back, put in a lower high, and then began a breakdown. As soon as we began breaking through these support levels, you needed to be stopping out of this trade if you were long and adding to your shorts if you're looking to build a short position. Fast forward to present day. Here we are, May. We are trading below the lower band of prior support last seen back in 2002. What ideally I would like to see is a pullback to this lower band of support down here at 3.68 for a really, really good risk to reward entry point. However, if they do allow it to close above this support level or now resistance level, I would consider buying the stock then. Note over here I have overlaid is a 10-year yield. BTU trades with the 10-year yield. Note, the 10-year yield rose, so did BTU. Down here, when we bottomed, so did yields for a year, and BTU rallied. So right now we're seeing a 10-year yield that is rapidly accelerating, so that may bode well for BTU. So we'll keep an eye on it. I like it, and this is one that we may be adding to our portfolios, as we might with all of these. So members, more to come on some of these in the coming days. Wheat, this is for our fellow member, Jesus. All right, wheat is in a downtrend. I've been liking wheat. Jesus sent me a chart last night of the CRB, that's the commodities index. Commodities are doing well. We're seeing a breakout on wheat. What we need to see is a breakout above this upper band of the declining downtrend channel. Double bottom set up on RSI. So I wouldn't be a buyer just yet, but soon. Note the strong up volume. It's a sign of institutional accumulation. I like wheat. Fellow member Karen is requesting LOCO, El Pollo Loco Holdings. This is a good company. However, it is breaking down. It broke down below the lower band of the rising uptrend channel. It attempted to recapture today and was rebuffed. In fact, it closed down below the 50-day moving average. I would say avoid the stock right now, unless, of course, it recaptures prior support. Then you can look to get involved. Next stock up is Cal-Maine Foods, CALM. We booked profits to the short side on CALM on April the 28th. How did we get in to the short side at the very top on CALM? You don't need to sit in front of your computer all day. All you needed to do was take a look at the technicals. Overbought on RSI. Leaning into the third standard deviation Bollinger Band where it's not supposed to be. And then what we did is we identified historic resistance. And here it is at 47.36. What did we do? We entered an advanced order in right at that price point. It was triggered, and the stock sold off well off the highs of the day. We took our pound of flesh out of the markets. The computer did the trade. We booked our profits, moved to the sidelines. You know, folks, if you're out there and you're day trading, you know, please avoid doing that. I have a lot of respect for day traders. It's extremely hard. And in this day and age of high-frequency trading, if you are not equipped, meaning you have your machines, your servers co-located next to the exchanges so you can do some rapid-fire trading, or if you're not extremely disciplined to get out of a trade quickly, you're going to get killed day trading. It's not what it used to be back in the late 90s and early 2000s. It's a completely different game. I'm not saying that people can't make money doing it now. It takes a very, very specialized skill set. Not many people have it, and I'm free to admit I don't have that skill set. I am a pure-bred, die-hard swing trader. I like to sit back after the market closes, take a look at the charts, set up a game plan for the coming days, enter my orders into the system, and let the computer do the work. So Cal-Maine Foods is looking good from a long perspective now. We were short. Now we're looking to get long. Note the bottoming tail today. Volume was good. So the pullback looks like it's near an end. We'll consolidate, and we'll look to get long of CALM. I'm just not ready now. I'll need to dig down into the intraday charts to identify a good risk-reward entry point. CYBR, another swing trade we just stopped out of back here. We bought it back here on this breakout. Now what you have is a stock which went into a flag formation, or you may hear it termed flagging out, which is a very powerful consolidation. The stock broke out last Friday on the 1st. On Monday, it flashed a reversal day. On Tuesday, a breakout point failure. It broke back down into its base. Last night when I was speaking with members on Market Pulse Check, I mentioned I still like CYBR. I want to buy it, but I need to get it at a lower price because of this breakout point failure. Whenever you see these breakout point failures, in all probability, you're going to see a pullback to the lower band of that trading range. And many times you'll break down below that lower band of support. I'm looking for a price target. Let's say the high 50s. I'll leave it at that. Members, more on that in the coming days. Down volume decline, which is bullish. These Stokes are rolling over. Not good. We're going to need to see these firm up before we decide to open up a long position. Next stock up, FEYE, same sector, FireEye. A very, very good company, but the chart is a little bit messy. We stopped out of our trade back here when we began this breakdown. The stock rallied back, but what did it do? The market sent you a signal. It put in a lower high. Prior high, 46.44. New lower high, 44.89. When it broke down below this key support level, you needed to get out. So I would not be a buyer of FireEye right now. It needs to consolidate. It needs to show that it's at a good support level. Then we could look to get involved. I love cybersecurity. I think it's going to be a great play moving forward. You can go back to my videos going back months now. I have been extremely bullish on FireEye, CYBR, HACK, HACK, which is the ETF for the cybersecurity plays. Another one, Palo Alto Networks. Next stock up, Facebook. Last week I mentioned that this one was poised for a breakdown because the last time I discussed this was back on the 29th. We had broken down below the lower band of this support level in dotted blue. The following day, hammered. Now we're down to the 200-period moving average, which is at 77.36. We flashed not quite a doji star formation, but close enough. I think we're going to get a rally in Facebook, probably back up and into this resistance level. Will we close above it? Who knows? You never know until the markets are closed. So we'll take a look at the intraday chart of Facebook, and I'll see whether or not there's a trade to be had there. Members, I'll send out a note on this one, possibly to the long side. I would certainly not short it. Does that mean that if it rallies and fails to break out or above this prior resistance level that we won't short it? No, we could quite very well short it if this stock fails and puts in a new lower high. This is for fellow member Ron. Ron has been doing excellent in Hero, and we are at resistance, Ron. So a heads up here, please. You had topping tails on the 5th. Today, the 6th, hollow candlestick, which is a sign of indecision. You don't want a hollow candlestick at the top of a trading range. You may want to look to book some profits. Next stock up is Chesapeake Energy. This was looking good a few weeks ago. When I drew this chart, we had a nice rally off of it, but now it's getting hammered today, down. How much are we down today? Wow, 7%, over 7% on Chesapeake. That's a huge move. Chesapeake's probably going lower. I would not touch Chesapeake. Institutional distribution, avoid it. Avoid Chesapeake. Mollycorp. Okay, this is another one I went over last week. I mentioned if we got a breakdown below the lower band of this rising uptrend channel, you had to get out. If you had listened, you would have preserved all of these profits. If you didn't listen, look at the beating that you would have taken. You would have given back a lot of your profits. I would not be a buyer. We may fill the gap here at 62, let's call it 63 cents. Will it hold? You'll only find out after the market closes. Review the charts then. And the reason why there's value in reviewing the charts in the evening rather than during the day is because it prevents impulse buying. How many times does a stock look bearish intraday and you go ahead and you short the stock, and then by 4 p.m., the stock is trading higher and you're kicking yourself? So there's a type of trade that I like to do. It's called end-of-day trading. That's what I profess. It eliminates impulsive buying or selling. BRZU, the Direxion Daily Bull Leveraged ETF. Okay, this is not for the faint of heart. This is a bull ETF that puts you 3 times long of whatever index tracks Brazil. I'm not quite sure. You'll need to do that research. Now, take a look at your RSI, which is a forward-looking indicator. It broke down below the lower band of its rising uptrend channel, and it did so in advance of today's breakdown below this lower band of support. This is why you always want to pay attention to your indicators. My favorite, the RSI. Second favorite, the stochastics. Now, given that we broke down below this support level, we can't touch it. We can't buy it. I wouldn't short it, but I would look to enter at lower prices. With the U.S. dollar pulling back, I think that we're probably going to get an orderly pullback on BRZU, and then it will probably rally higher if the U.S. dollar continues higher. PLG, Platinum Metals Group, weekly chart. Okay, I'm not loving it. So far this week, we have a bearish key reversal. If we close down near these lows, and especially if we break down below 41 cents, I would have to say avoid it like the plague. Now, if we reverse off the lows of the week to close higher, well, then it might just be a buy. This is one where you need to sit on your hands a bit and just watch it. Let's go to a daily chart. All right, so on the 6th, they tried to break it out, failed. Bearish engulfing of the prior day's move, very bearish. Today, they tried to rally it. They closed it off its highs. This is a very volatile stock. We could move higher, but if we break down below 41 cents, you got to avoid it. I wouldn't touch it right now, perhaps in the coming days. Vigi Inc., VGGL. This is one where what concerns me is this support level here at 2.30. We had a huge rally up and into $3.39 per share. Lots of overhead supply. Prior buyers looking to get made whole. They got their money back. They don't care about making new money on VGGL. They just want to get their money back. They've been sitting with this stock for months now. They're just happy to get their principal back. Forget about making any money. They're so discouraged with the stock, you can't put it into words. Does that mean it's a bad stock? No. That's opportunity when people sell like this. But right now what we need to watch out for is we have a little double top going on here. We have a prior high of $3.39, a lower high of $2.92. Now we need to see whether or not we're going to hold $2.30. If it fails, this would mark a continuation breakdown if we close below $2.30, and you're probably going to see some big investors begin to dump shares. So you need to watch $2.30. If it holds and starts flashing bottoming tails, then you could look to buy. Indicators are not looking strong. Double bottom setup on ADX. Looks like it wants to go higher. I think that we're going to probably see lower lows on VGGL. I would avoid right now. Just watch it. If you have a profit, just use a stop loss just below $2.30. That's all. TZA. What can I say? I'm bearish the market. I have been for quite some time. Would I go buying TZA tomorrow? No. I think they're going to rally the market into Friday's jobs report. Would I look to build a position in TZA on that rally? Absolutely. So we'll be looking to build a short position in TZA, but not right now. Perhaps in the coming days. The UUP, this is the Power Shares US Dollar Bull Index. All right, so we broke down below key support today at 24.86. I think we're probably going to head lower, probably down to 24.50 if they're unable to spike it tomorrow. Now, Goldman Sachs came out today, and they said that we've probably seen the lows in the U.S. dollar. Listen, I don't have an account with Goldman Sachs, nor would they want me. Why are they giving me free information? Why are they talking up the dollar? Somehow or other, they're profiting from it. They're probably short the euro. They need to get the dollar rallying so they can get out of their euro trade. Don't listen to, God forbid, don't listen to the Darth Vader of them all, Goldman Sachs. So when you see headlines out of Goldman Sachs, trade the opposite direction. Okay, the last stock up is going to be Natural Resource Partners, NRP. This is another one I went over last weekend, and you can go back and look at all of these, or most of these anyway. I went over them last week on Member Stock Pick Request. It's out there on the blog and on Twitter, StockTwits, Seeking Alpha, etc. NRP is nearing historic support on a monthly chart last seen back in 2003. That's the price target we're looking at. Now, since I last spoke about NRP, it began to stabilize. Let's go to a daily chart. You can see that it showed some signs of strength. Doji star formation, reversal tails, then a little bit of weakness. Now today, it's breaking down below support. I think that we are on a final trajectory down to that monthly price target. So show patience and wait for that 2003 bottom, because it looks like we're going to hit it. This is why we use historic charts. And we don't want to be impulsive by trading intraday. Volume to the downside rose today. I would avoid NRP right now, but this is a stock that we will be looking to trade in the coming days, but it must hit our price target. And that's it, folks. If you have any questions, shoot me an email. If you're not currently a member, enter your email address to get some free trading lessons on the website. If you are watching this on YouTube, Twitter, StockTwits, LinkedIn, Yahoo Finance, or Seeking Alpha, please follow me. And everybody have a profitable trading week. Beware of the jobs report that's set to come out on Friday. Be well.